Hello friends, good evening. Can you hear me? Hello, can you hear me? Yeah, welcome. So welcome to the 8th webinar. Okay. So how are you doing? How was the previous webinars? You were able to do it? How is it? Okay, thank you. Okay. Yeah, please, Ravish. Yes, Ravish, you can ask a question. No problem. This is my last webinar in this series, so you can ask many questions. No problem. We will take 5 minutes in the initial time. Where we can get the early webinars? Yeah, you may go to YouTube and search auxiliary webinars. Yeah, there you can see all the webinars. Yeah, thank you. Yeah, Eurovision support. Yeah, core support. Very good. Yeah, core support. Yeah. Success rate. What is success rate? Yeah, see, success rate was, if you see, I'll explain in the coming sessions. Okay, success rate is more than 70%. Okay, but if you get a more success of 50 also, it is well and good if you manage the risk reward. Yeah. So today we are going to discuss about the indicators and oscillators and some kind of very effective indicators used in trading. Though I'm not a fan of indicators, but I think that the beginners could easily follow it up if you use the indicators to somewhat. Okay, so I will teach you the essential indicators, but you apply in your chart, which is more convenient for you. Then you do it. Okay, so let's start with the presentation. I hope all can see the screen. Yes. Yes. It's very repetitive thing to discuss about myself again and again. For those who are new into this webinar, first time in the webinar, just a quick introduction about myself. My name is Mithun. I am from India, but I'm staying in Dubai for the past 3 years. I'm a professional trader and fund manager. I have been trading in the industry for the past 12 years. Okay, and I have trained more than 400 students across my career span. And I had two companies here, one in India, it's called Midin's Money Market, and last year it got an award from the as one of our top 10 institutes in India in stock market areas. And I have a company in Dubai, it's called Learn the Market LLC, where we mainly provide the training and consulting towards the brokers and the traders here. Okay, so once again, welcome all to the webinar. Okay. So regarding the moving average, so how many have you heard about the moving averages? Yes, we are covering the Fibonacci, don't worry. Yes, okay. So actually, what is indicator? I will explain to you what is the basic difference between a naked price action and indicator. Indicator is actually the derivative of the price. What you see in the chart, the chart is a real price. Okay, but some people, and we can use some indicators for assisting our decisions. It is not accurate. It is like a, what I can say, it is like a bridge over the river. It smooths your decision making to somewhat. Okay, so one of the commonly used indicator is moving averages. Okay, so I'll show you what exactly is moving average. This is the moving average. Okay, and how you can take it? You can go to the MT4. and you can see here a plus symbol, indicators list. Click here, go to the trend, click the moving average. So we can use 50 moving average for now. Just type 50, give the MA method to exponential, and apply to close. Just give whatever color you want. Okay. Now if you see here, the basic idea of moving average is that it is an average value of some indicators, some of the prices. For example, if you take 50 moving average, it is an average value of 50 candles, 50 candles price. Okay, you can say 50 candles price. So it is average value of this candles. The basic idea of the moving average is, if the price is below the moving average, it is coming down. It is coming down. And if the price is above the moving average, it has chance to go up. That is a very simple explanation. Okay, very simple explanation. If the price is above the moving average, we can say the trend is up. Or if the price is below the moving average, we can say trend is down. Okay. So now I will teach you one easy technique how you can use in your daily activities. You take the daily time frame, and you put one indicator like this. Okay. Hope you all remember the patterns, right? Patterns which we discussed in our previous sessions. The pin bars, inside bar stuff, right? You forgot? Okay. I think there is no answer. I think you understand what is a pin bar. Okay. I'm not going to explain the pin bar again. So I'm teaching a simple technique which you can use our previous strategy with a moving average. So you apply the moving average here, and you look for any pin bars, any patterns which we discussed. You see here the price initially moved from here, then it came here, then we got inside bar here, then what happened, again we got some pin bars here, then again some pin bars here. So the pin bar is touching the moving average. That means the price initially has went up. When it touches the moving average and a pattern is been created, there what do you do? Tell me, what do you do? What can you do here? When the price touches a moving average and a pattern is formed, what you can do here? Buy. Very good. Buy. Who told? Abdin, Camel, yes. Mujur, Nauri, yes, we buy, yes, cut. So we buy it. Same like you see here. The price touches the moving average, then the price comes down. Nicely comes down. Then it reaches a double bottom, right? A double bottom. See here. First bottom and second bottom. There you got a bullish pin bar. Price went up. But it touches here, it didn't work out. See, there is nothing worked out. It just went up, is played around. Then it breaks the moving average and went up. Then it came to these levels. At that time, we can consider the buy. Okay, this is the first technique. Next, I am going to teach you a bit more advanced technique. Hope this is clear for you, right? Yes. I think my image is there, right? So the topic is like advanced advanced moving average plus patterns plus levels. So you're going to combine the three confluence, three ideas together. Okay. So you are going to enter a trade. Once you get these three ideas together. Okay. So if you see here, you can see a support here, right? A support is there. So you saw a support is nearby. Then if moving average is here, this one. Then you got inside bar here. So 1, 2, 3. So when the three parameters matches, you got an opportunity. You also see here, this is a previous, see, a previous resistance now becomes a support. This is the areas where we look for buying or selling. Okay. So here we got an opportunity. What does 3 means? What I mean that we are trying to buy when the three parameters, for example, moving average is one parameter, one indication, patterns is another indication, levels means support. So now you are going to make a trade only when three parameters comes into place. Hope you're clear. Yeah. Okay, good. Okay. So now we will see some live examples. Then we go to another indicator. Okay. Sometimes a mouse won't. So now I will teach you one technique to find out the trend. You can write a heading called how to identify the trends. How to identify the trends, because last class we learned by the swings, we learned how the trend is going up or down. Now I am going to teach you one technique which you can understand the trend using moving averages. Okay. So you simply go to here, put the moving average 8-day moving averages, and go to moving average again, put 21, put another indicator, close. So you are using now two indicators, two moving averages together. Okay. You see here, it will help you to understand on a bigger picture, Okay. So if you see here, the gold rally. See, the idea is when the small moving average crosses a bigger moving averages, we go for buy. For example, I have used here 8-day moving average and 21-day moving average. So when the 8-day moving average crosses the 21, we go for buy. See here, it crosses. And from here to here, the price has moved. How many pips can anyone say? 8 and 21 means 8-day moving average, 8 days. Okay. So the price has moved 21,000 pips. Means if you have taken one standard lot of gold from here, you would have made $27,000 from here to here. Okay. And from here again you see. Again the moving average crosses the red crosses the blue line. that called the blue line. So from here, again it moved nearly 11,000 pips, 4 points. Okay, hope you get an idea. It is a method of using the two moving averages together. Yeah, 11K. Yeah, you're right, 11K. Yeah, so it is mainly to help you to understand the overall trend. I mainly use to understand a trend, but not for trading. Just get an idea how the overall market is all about. You go to the euro, and you put some 50 moving average, say 50 EMA. You can see the nice trend is down. See, every time the price touches a moving average, it comes down like that. So the overall trend is down, moving average. You can put 18 to 21 day moving average. See here, from here it's down till much. It enters choppy for some days. Then again it closed here. It came down nicely. Okay. Okay, fine. So now we'll go to no audio and video. I think hope you can see me, right? Yes. Okay, fine. Now we are going to another indicator called MACD. MACD. MACD is a oscillator, a momentum indicator. So there is indicator MACD. Just understand that one. No much complication. You put the MACD, you can see a window like this. Okay. Convergence and divergence. Okay. So you put the MACD here, and when this kind of wave, when the wave is top here, and you club the price also here, okay, then if it is a very top, you can sell from here. I'll show you a more clear picture here. If you see here, see, this is a very tricky thing. Yeah, I'm showing advanced MACD in plain charts. Is it okay? Can anyone see advanced chart, advanced MACD? Yeah. Yes, fine. So now you see here, you put the MACD. I will show you in the live chart, but now you understand here. You put the MACD here and you check the chart. So this is the area where the price touches the top. Same time the price touches here. See here. And what also we know from the previous class, we learned it is a bearish pin bar, right? Bearish pin bar. And what else you can say? What is this? First top, second top, third top, right? Yes, very good, very good. Yeah. So here we got an opportunity combined with the MACD. So there you go for sell. Okay. Now you see here in the bottom, the curve is like this, and you got a nice tip here. Same tip, if you see here, you can just give a buy from here. The price went up. I just bought a new pen. I'm just learning it. Okay. Okay. Now again you see here, we got a nice top here. Top. Then the price teaches here. It falls. So if you know that this is the working of this indicator, you can use it. But my advice for you is that use only higher time frames. Don't go to smaller time frames. Better use daily charts or 4-hour charts. Okay, for this indicators. So it give you more confirmation on that one. Can anyone spot some turning points with the MACD? Yeah, Camel. Yeah, what you said is correct only. It's from history only. That is why I told I never rely 100% on the indicators. But for the beginners, it is just like helping hand for us. Okay, I always start with the naked price action chart. Okay, but you can but in the initial days, you can use this as a small helping for you. That is a way. So when the more conditions satisfy, you take it. It's not like that when you see a bottom and a MACD, just buy. No, it's not like that. As I said here, as I told the first example, when a nice bearish pin bar or a resistance comes, then you see, then you take it. Okay. 24 September. Yes, very good. Yeah, this one, right? The bottom, you can see a nice opportunity here. Yes, here. You see this one, yeah. And here also, no? This also, see? Very bottom. This low, this top, and this low. And you see here again the first top and the second top. There you got an MACD high. So price came down. Yeah. So guys, see in trading there is no 100%. It is like the probability game. So you are trying to understand something, and with the proper risk reward, you manage it. You got the idea. For example, you put a sell from here. You sell from here. Keep a stop loss here. You take a reward of here. Take profit here. So you got 2 times profit. 2 times here. Okay. But here, say suppose where is a buy? Yeah. So suppose here you take in buy. I'm seeing some levels. Yeah. Here you take some buy, but the price comes down. So you hit a stop loss, but that is okay. So number of times, for example, 10 times you take the opportunity, and say 6 times you got the profit. So then also you make some money, right? Risk reward is there. That is how trading is there. Not every time it wins. Yeah, never go against it. Yeah, correct. Okay, so yeah, I'll just show you how to keep the MACD here. You go to the chart here. Oscillators. You go to the indicators. Go to MACD. Okay, indicators and oscillators, MACD. Just give the default values. 12, 26, 9. Just give the default values. No need to change it. Okay, just put like this. This is the way. Okay, so you can see here the peak and the candle bottom. The price moves. Then you see here this high and the candle high. So we have discussed in last class that what is this? This is a resistance, right? This is a resistance. So in a resistance, you got an MACD high also. You understand? So you're clubbing together. Yeah. I hope it's somewhat clear for you. Is it okay? Yes. Okay, fine. So now we discuss the moving averages, MACD, and next we go to the Fibonacci chart. The basic, this is called a Fibonacci lines. Okay, Fibonacci tells that market always respects some levels like 38, 50, 61, 100. So if price reaches some level, say 50 and 61.8, the market can go further up again, like that. Okay, so I'll show you here in the chart. Which chart was a JPY? I will take the color of actually. Takes Fibonacci, draw from here to here. Yeah. You see here, this is a tool from here. There is an F here, no? F for Fibonacci here, F here. Just draw this one, and you can see here. And if the price respects at say 50 level, the price can again go up. Okay. I also don't use Fibonacci much. I generally use just to understand the levels where the price is resting. That's it. Okay, Fibonacci level, yeah. And if the price breaks 100, it can go to the further, see, 260, 161 and 261 levels. If the price breaks this level, okay. But no one can say predict the 100%, 100%. It's just an anticipation. Where it can go. Okay. So that is Fibonacci. Any doubts on this one? How to draw these lines, please? Okay. So I'll show you once again here. You go to the see here. There are so many indicators are here. See here. There is a chart. Draw Fibonacci retracement. Okay. So just click on the Fibonacci. Just click your mouse with your left button and simply drag it. Okay. That is a way. Very simple. Yeah. Very simple. So it gives an idea where to go. For example, you assume that the price was here. So okay. So now you see here, and you can write in your book. There is a law called 50% rule. 50% rule. Okay. So if you look for a daily time frames, market, there is a tendency for the market to respect 50% every time. If you draw from here to here, 100 to 0, see market has pulled back to 50 levels. There we got an inside bar. See here, inside bar is there. From there, the price nicely went up. Actually, I have mentioned about this opportunity in our weekly updates on that particular week. That one, yeah. So, yep, that is a way. Okay, we can draw it selling also. Just draw opposite. Just draw opposite. That's it. Okay. Any questions on this regard? So now we discuss 3 indicators now. Yeah. Okay. So let me go to the next one. RSI. RSI, yes. RSI, have you heard about RSI? Relative Strength Index. It is a very common indicator most of the people use. Hello, RSI. Okay, good. Okay. It basically says overbought and oversold areas, basically. Okay. Yeah, the strength of the markets. But see, market is always very, very interesting. Okay. Whatever we thought, whatever we think the price is already oversold, market can even continue further down. Okay. And whatever we think market is already on board, the market even push further up. Okay. So, but sometimes it nicely works. Okay. So you understand the phenomenon of RSI. Okay. And try to use it and try to customize it for your requirement. Okay. The two important values of RSI is 30 and 70. 30 and 70. Okay. It means that when the RSI graph touches the 30, the price can go up. That is the meaning. And when the price touches the 70, excuse me 1 second. And when the price touches the 70, this area, it can come down. You see here, the price touches the 30 area here, and it is on a bottom. The price went up. See again here, the price touches 30. Are you following me? Are you following me? Are you understanding? 30 and 70 are the two levels. When the when this curve, when this curve touches the 30, the price can go up. When the graph touches the 70, the price can come down. Okay. So the price touches 30. See here, nicely went up. Yes. See here, it touches 70 area. What happened? The price from here, zoom, not zoom, from here just came down. Then it reaches a 30. Again, the price went up. Okay. But here there is no 70 here. See, there is no 70 here. See, the price has not reached 70. That is why I told you indicators are lagging. Our price action works first. We got a bearish pin bar. See here. We can sell from here. The price comes down. Let's say when the price touches 30, but the go dot, how many times how to 10 buyers will hit my stop loss? Yes. For example, you buy from here. Suppose you buy from here. This is a 30. Say this is a, you think that the price is at near 30 and is near 30, and you buy from here. Buy. You keep a stop loss here. If you book from here, it is fine. If you keep take profit here, what happens? The price reaches here, then came down. Hit your stop loss. Yes, that has hit your stop loss. But ideally, what is the trend here? The trend is down. So you prefer to sell with the trend. Okay. You prefer to sell with the trend. Yeah. Now you see here. This is today's price. Okay. Today's Euro USD price. I have taken a live chart. Okay. See here. It is on a, we got a nice bullish, a small bullish pin bar here. It is on 30. There is a chance that Euro can go up. Okay. but I didn't simply buy from here. I'm just waiting for more confirmation. Okay, because overall trend is down, so I'm waiting for a best reversal to happen. Okay, I never try to jump on the opposite side. I prefer to stay with the trend most probably. Okay, so this is a nice area which we can look for buy. On the confirmation, we will go for a buy from here. Only on the confirmation from here. From here, yeah. But can it be 70 for overbought for days? Yeah. Yeah, correct. Yeah. Now you see the case of indices, Dow Jones, S&P. It is continuously going up. Many people think it is overbought condition. Price is again moving up. So that happens. Yeah. So currencies are more good for this kind of trading in RSIs. Yeah. Because currencies always go up, then come down, plays in a range mostly. So these indicators are good more on the currencies. I feel so, but it all depends upon the traders. Okay, because some traders have some strategy for the indices, some for currencies. But my opinion is that you understand that you learn some indicators and you do in demo, practice it, and whichever is suitable for you, you take it. For me, I have used a few indicators previously, but I'm not using too much indicators now. I can spot the market on a naked chart to some extent. Okay, and I do trading accordingly. The key is the money management. Managing of the trade is most important thing. Please help us spot in the naked chart. Okay, I think we only covered some topics in the last classes. I hope we covered a pretty good topics on the last session. So what more are you looking for? Some examples. Okay. Okay, Mr. Vish, I'll for you. I will tell you an example here. Clean chart. Okay. So we will take this example. So coming back to our thing. What for your trading? For your trading, you understand only one thing. Okay. I'll just draw you something here. New chart. For our trading, we require only three things. Okay. T, L, S. A trader requires only three things here in trading. One is a TLS. T means, can anyone tell T? What is T? Trend. Yeah, very good. Very good. Yeah. So trend. So how do we identify the trend here? We learned in previous classes, right? So if the highs are above the previous highs, we can say trend is going up. If the lows are below the previous lows, trend is going down, right? That is a naked chart. Now you learned in the moving averages what? If you use 8-day moving averages and 21-day moving averages, when the 8-day moving average crosses the 21-day moving average, you go for buy. Same ways, when the 8-day moving average crosses 21-day moving average bottom, you go for sell. So 8 and 21. So this is a two method which we can use. People who are good in drawing, analyzing the naked chart can use the first option. People find some difficult to understand the charts can use the moving averages to identify the trends. That is clear, right? Yeah, it's for daily chart. Daily. Is that clear for you? Yeah. So now we go for the levels. How to learn the levels here? We have 4 levels which we learned the last class. This is CMP. Then comes first is IR. Next is CR, IS, and CS. Means if the trend is going up here, you buy from here. If it again goes up, again you go for the buying from here. So price, if the price breaks here, it can reach as the first support. If it again breaks the support, it can go to the next support. So there you learn the levels. Then what you learned? The signals. 2 signals we learned. There are a few more strategies which I use, which I cover in my advanced classes. For time being, we learned two signals. Okay. One is a pin bar we learned, and 2 is the inside bars we learned. So we learned the pin bars, yeah. Then we learned the inside bars. So whenever these patterns comes with this trend and these levels, we take a decision to go for a buy or a sell. Right? Yeah. So we combine all these things together and we take a decision. And money management is a very hot topic. Very hot topic. I think Thomas has already covered to you psychology and money management. And tomorrow we are having a last webinar. So in that one, I hope he'll be explaining you the more detailed, more confined manner. Okay. So this is the way we trade. Okay. In 30 days, how many positions do you recommend? You just wait, let me see the chart here. Okay. And then how many positions do you recommend to take? In 30 days, see, it all depends upon for us. So you just like on my Facebook page. Okay. So whatever updates I'm doing on a weekly basis, you will get the updates. I trade basically 5 to 6 pairs. So that one you will get. Okay. What markets are best for these indicators? So the best indicators, I told you, the currencies are the best. Currencies are the best because RSI and all very tough to work in the this one indices. So always going up now. So when you say overbought, then again the price going up. So you get a confusion. Yeah. Which time frame is for intraday? I suggest for the beginners 4 hour chart, 4 hour time frame. Of course, it needs some patience from your time for you, but it is a good actually. It will protect your account. Okay. First of all, you understand. I hope many of the people are beginners here. So you're putting some $1,000, $2,000 account, or even $10,000 account. That one is not going to make you a huge money tomorrow. Okay, you're putting some money. You understand the money management. You're learning the process. How you can be a better trader with that money. Once you are good in that process, money automatically flows to you. That is a method. Yeah. Well, commodities are sending a lot of false signals with these ones. Yeah. Yeah. Commodity, yeah. The currencies are good. Yeah, good. Yeah. I think today's a very short because I'm not a much expert on the indicator, so I want to keep it very simple and very information on that one. Yeah, yeah. So how many of you doing demo trading in Xperia platform? How is it going? Yeah, very good. Yeah. Is it possible to $10? No, no. I think minimum is $100, I think. But as I told you, the actuary is providing you $50 free live money. You can register in the website, and they will provide you the $50 educational live money, which is withdrawable. If you make the profit, you can withdraw it. Yeah, I have now 10,032. Very good. Yeah, you're slowly doing it. Yeah. Are these indicators, oscillators effective in 5 minutes? Yeah, definitely it is effective. It is effective. But see, let me ask you a question. Which friend do you trust? You know two friends. One friend you know for 1 year, and one friend you know only for say 1 week. So which friend you trust more, or which you depend more? A friend you know within a 1 week, or a friend whom you know for a 1 year? So same wise in the market also. When you look for 5 minute time frame, every 5 minutes the candle is coming and going. But when you look for a daily chart, you know why I always say look for daily chart. You understand? Daily chart. What could be the logic behind that one? What do you think? What do you think people in online tell the beginners to do only in daily chart? What could be the reason? Can anyone answer? Weekly, yeah, weekly is okay. Weekly is mainly for the position, one of position trading stuff. Yeah, daily because the forex market is 24 hours. Okay, it opens from the Australia and ends in the US. So you get to understand what the banks, institutions in all these countries do on a daily basis. You understand? So if you take a daily chart, you can see what the US government, US people is thinking about this currency. What about the AUD people? What they're thinking. So you can idea how the market responds to a day globally. That is why we prefer to take daily for decision making. And you can go for 1 hour time frame also for the best entries. Then you can do it. Once you're a bit experienced, you can do it. You can do it. How do we choose a broker? Okay, based on what? For example, okay, Axior is one of the leading broker in Europe. Okay, and you can only a few brokers provide a slippage and everything, the details on website. Okay, so you can go to the website and see what is the slippage and those kind of things. And the spread is also very competitive. What I understand is that it's very much competitive. Okay. I'm not a part of Actuary, but I'm in a third party. have my own company here. But what I understand is that it is a very reputed company and very good, very less slippage. And you can practice it. Once you do a few trading, you'll understand the real execution and everything. Yeah. I think they are conducting one webinars exclusively for this regulation, those kind of things. Okay, you may better check with the support team. Yeah, please. Yeah. Yeah. Which broker? As I told you, this program is conducted by Axiori. Axiori. So you can download the demo platform of Axiori, and you can request for a $50 live money from the company. They will give you one account with the live money, which is a withdrawable money. If you make a profit of that one, you can withdraw it also. The main purpose of good brokers is to I rarely see brokers give this many quality education over a series of webinars. I rarely see. Okay, so the main purpose is like for a good broker, whatever trades you do, they get a small brokerage, small commission on that one. That is the revenue. Okay, so better you learn properly and do it, then you will stay in the business for a long time. So you are benefited, and the broker also benefited. So that is why education comes into picture. Nowadays, most of the brokers are coming with so many education. Why? Because now it's more online and more when you educate, you trade, you make money. Broker also make money from the brokerages. That is a way, a win-win situation. If I have $10,000 account, how much maximum time I should take? Yeah. See, that one, it all depends upon the money management. Okay. It is a bit lengthier topic. I think my partner will already explain to you, or there will be webinars already explain on that one. Or tomorrow we'll be more explaining on this same topic. Because tomorrow's topic with the professional trader discussion. So there you'll be understanding how many loads and all. Yeah. You always think like this. There is no fixed rule for this percentage amount risk. For example, you have a $1,000 account. I'm telling you, if you're risking only 1%, say $10, $10 means you're not going to make much money on that one, right? Only $10 you're losing. So the profit is also limited. So initially, you get a confidence by taking the small risk and a better reward. Once you're confident, increase the stake on that one. Yeah. What conditions attached to $50 bond? I think you need to do some trading volume. I think 20 lots, 30 lots, some lots you need to put, because they need to cover the brokerages on that one. That's it. Yeah. Yeah. Basically, yeah, some lots. What do you mean by entering the live chart? Yeah. So we whatever we see in the live chart only. Yeah. So okay, guys. So I think no more questions. Didn't teach us how to make use of Fibonacci. Okay. Fibonacci, I told you now. Fibonacci is the levels. The 50 and 61.8 is the levels. We look for the retracement or the market pullback. When the price, okay, I'll show you once again. See camel here. See who is the blue. Okay. Take the Fibonacci here. You think that market is here. Okay. Market is at this current point. This is your current price. Okay. Let me bit more. Yeah. Here. So you don't know where the market can come or go. This is the current price. So what you can do here, just take the Fibonacci, click here and just draw it to the bottom. So as I told you, 50 and 61.8 is the best levels for the retracement or pullback. Once the price reaches the 50 or 61.8, any patterns appear, go with the trend. You see here on the 50 level, we got some patterns. If you attended my previous classes, I have taught you inside bars, right? Inside bars. So from here, the price nicely went up. I hope I answered your question, right? Blue. Yeah, thank you. Great. So that's it. Okay. So I think I really enjoyed the last 4 webinars and all the series of webinars. There was a nice interaction from you guys also. And I really wish all the people who attended my webinars and our webinars should be beneficial and you make some good money on the trading. And those who are good in trading also, I also provide them opportunities to them, some trading opportunities. So if you want to become and if you practice it, be a good trader. And if you have any doubts on regarding that one, you can email me. I'll be there for your support. Yeah. So whatever country you are in, keep in touch and definitely do it for strategies. Yeah. We will see it here. We'll see it here. Yeah. So thank you guys once again. So hope we'll see in the coming sessions or anything. If they are conducting any webinars, we'll see next time. Yeah. Yeah. Yes, I am based in UAE, Dubai. Yeah, sure. Okay. If you like my sessions, you can write me on a Facebook on review also. If you like my sessions, just give me some reviews on my Facebook page. Yeah, that's it. Yeah, yeah. So thank you, DS. So thank you, DS. And one more thing, you take some only few pairs initially. Few pairs, whatever I taught you, just apply it, and do it. You can really see the improvements. Okay. And if you want any help, just contact me or Axiory team. Okay. So take care and have a nice time. Nice evening to you. Yeah. Bye bye. Take care. Bye.